coming.
Hi everyone, thank you for coming to our 4th Pulse event, and thank you to Joho as well for doing so, and Alice for doing so much to organise this. They put so much effort into making this work, and this year, obviously 2 days, much bigger, more people, so yeah, thank you for that. I'm Paul Rogers, this is Josh Duggan, we co-founded Vivant. We'll give a bit of an introduction to the company, but this is probably the only time over the next 2 days that you'll hear about Vivant. So we founded the business 8 years ago. I did have a little slide about us and our history of being best friends, but everyone said it was rubbish, so I took it out. But yeah, we are best friends. Started the business 8 years ago. Initially, we were more of a consultancy, so we would go into brands, help them kind of build out D2C or prioritize D2C better for more kind of wholesale, traditional brands. We've got, from there, we then, the media side, the paid side, grew into more of a kind of traditional media buying agency. That's the bigger side of the business. So that's a team of 50. My e-com consultancy team is a team of 10. And then collectively across the business, we're a team of around 63. And then just in terms of the services we provide, so on the paid side, we offer performance marketing, brand marketing and measurement. International is kind of a core pillar of everything we do. Creative and affiliate marketing, which are newer, so we introduced those 2 years ago. And then on the e-com side, we do a lot of kind of independent strategy. We manage a lot of a lot of re-platforming projects, do a lot of technology evaluation projects, independent auditing, and then we introduced experimentation, personalization, and customer research late last year. Here are some of the clients we work with. So our average client is a premium fashion brand. We're super proud of our client list, like lots of these brands Josh and I loved before we started the business. And then we also do quite a lot in the beauty and home and furniture space, but I'd say our average client is fairly similar in the kind of premium nature. And then I hadn't seen Joho's slide, so he does cover a lot of this, but just to introduce the event. So as Joho mentioned, this is our 4th event. The first event was much smaller. There were train strikes. We thought it would be a disaster, but it ended up going quite well. So we, persevered from there until today, where we've got 1,800 registrations, and we'll hopefully have around 1,200, 1,300 people here across the 2 days. The initial goal for the event, so I grew up initially around 17 years ago in the SEO world, and there were some amazing events that you would go to and learn loads. So the distilled events were definitely one of my big kind of inspirations as we started to think about this. Brighton SEO was really strong from a community perspective, and again, you would learn a lot from. And then Measure Camp had both, and I would say that and the distilled events were the best events I ever attended. So these were kind of our inspiration. We felt that there was kind of, not necessarily a need, but there was an opportunity for an event entirely focused on content that you could go and meet interesting people from interesting brands and learn from in the e-com space. So that's kind of what we set out to do. The goal for the event is purely that and community. There's no kind of objective to make money. That's kind of what we wanted from the start. And then lastly, we're taking this to New York in July. So if anyone fancies coming over to New York, you're obviously more than welcome. So last year, Josh and I did a talk that was quite broad, but we only had 20 minutes and we ended up going on for 40. And a lot of people said we ruined the event because everything was really late. So this year we've split it. So today Josh is going to give a bit of an intro into the trends we're seeing from a trade perspective across our clients and their key markets. And then we're going to talk through some results from a survey we did, which we sent to around 70 kind of e-com directors, digital directors, CEOs, head of e-coms, etc. And then tomorrow we're going to focus more on the kind of where our clients are investing their time and money, the trends we're seeing across things like AI and technology, and some of the paid areas as well. So Josh, I think,
amazing. So I'm going to talk through some like industry stats and trends. So firstly, I just wanted to focus on Google and Meta. So interestingly, both have seen an increasing rate of growth in 2024 versus 2023. So Meta grew 22% last year, which is pretty considerable. What's quite interesting is to kind of like lessen the impact on CPMs. Meta have begun serving more ads to consumers. But this has basically led to kind of like two challenges. So now advertisers have got increasing ad costs where CPMs have globally risen. And then equally, you're now in a space where consumers are exposed to more ads. So it's just much more difficult to kind of like break through the noise and capture attention. The next trend we've seen, so Google still growing, again, grew quicker in 2024 than it did in 2023. But what the trend we're seeing here is obviously proportionately Meta is growing quicker than Google. And we're starting to see a bit of a, I'd say almost like a reluctance to spend on Google in certain areas. So we're almost seeing a bit of a return of brand incrementality testing. So everyone wants to make sure they're spending like the optimum amount on brand. From a PMAX perspective, everyone's kind of like validating, brand queries versus non-brand, understanding the true increment value. So that's kind of what we're seeing across those two platforms. Next slide. And then from a trade perspective, so I always like to reference UK-wide e-commerce stats. So just across the entire nation, excluding November 2020, which was the Black Friday month of COVID, December 2024, so just 4 months ago, was the biggest month ever for UK e-commerce. So in a really positive position, I wanted to reference our clients here. And the general story for last year was across our client base, it's about 40 clients that we're looking at within the benchmark. There was about 30% growth for new customers throughout the year, but CAC was 30% higher also. And what we started to see was price kind of like sensitivity within consumers. All of that buying behavior was shifted to Q4. So you can see in the graph visual that for Q4, our year-on-year growth across our clients increased significantly. So Q4 was massive. CAC was actually flat year-on-year. So we definitely saw kind of like a bit of a shift for consumer behavior moving towards Q4. And then just really quickly, year-to-date, I think it's quite nice to reference for people in the room. So year-to-date, globally across our entire client set, we're driving 16% more revenue. And CAC is up 20%. So paying more to drive more, but that's kind of like the global position where we're up to. And then really quickly on international, on the next slide. So yeah, as you can see in the visual again, so Q4 was pretty substantial across all of our core regions. There's probably 5 main takeaways from an international perspective. So the first one, UK is performing really positively. UK is doing quite well at the moment, really big in Q4, also looking quite strong for Q1. US also was very, very strong. So you can see in the graph, Q4 was massive for US. So I'm sure in a lot of the panels today, we'll be discussing the tariffs and implications for retailers. And then the only other call-outs, so for Europe, as a region, it's probably been quite inconsistent for us. So the only real call-out for EU is that France, specifically the last 6 months, has performed really well. So we've seen a lot of growth in France specifically. And then Middle East was huge in Q4, also looking quite good this year. And then Australia is up about 30% for Q4 and Q1. So they're kind of the markets where we're seeing good growth and we'll be looking to kind of like expand further into this year.
Perfect. And then now we're going to talk through the survey results. So it's kind of split between e-com and paid. And like I said, I think we had 65 kind of senior e-commerce professionals answer, most of which are in that kind of fashion and lifestyle or those fashion and lifestyle segments. So the first question was around priorities for this year. So I don't think it'll be too surprising that profitable acquisition of new customers was the biggest focus. And I would say this is a big shift in the market I think everyone's seen. But we've definitely seen kind of behavioral changes within our clients in that they're investing more to understand the profitability around like all levels of advertising across the whole funnel. And then we've also seen a number of clients, and in addition to that, the incrementality point that Josh mentioned, and we'll come on to that a lot over the next 2 days. And then in addition to that, we've probably got 3 or 4 clients that went from being essentially their primary KPI was growth and new customer growth. And they've kind of pivoted more towards this profitability focus. And again, I think that's quite a big shift in the industry, but I'd say they're some more extreme examples. And they've essentially started optimizing their whole activity towards profitability. The next point, so I would call out loyalty here. So I think across our e-com consulting side, around 70% of people have loyalty as like their primary focus. And I think this is probably the only area in the industry where there's like a buzzword needed, because when I say loyalty, It's not necessarily kind of traditional loyalty program with the same kind of mechanics to increase purchasing frequency. It's more people trying to increase engagement with their customers, build more community into the program, and it's not necessarily kind of points-based or using those kind of traditional levers. So I would say kind of loyalty, clienteling, VIP, VIC, people understanding the customers, adapting the experience, improving kind of how they're communicating to different segments would be the kind of joint biggest focus that we're seeing. And the other one would be international. So this was probably the biggest surprise in terms of the results, just because I'd say all of our clients at the moment, partly due to Q4 performance as well, are like hyper-focused on either entering new markets or strengthening existing markets. And we'll come on to it in a second in terms of what we're seeing. And then the only other one that was quite surprising was data and measurement. So I think we've seen a lot of our clients investing in, it's probably one of the only areas where people are introducing net new roles. So either hiring someone to kind of take full accountability for reporting across the business and ownership of their kind of BI stack and things like tracking. And then also people kind of buying third parties and investing more budget in that area. And then in terms of increased investment, so where people are putting their money, so top of funnel, again, I don't think this will be too surprising. I feel like even from my side, the shift that we've seen is that people are essentially trying to move budget towards top of funnel to build brand awareness and kind of capture net new demand. So yeah, and again, this kind of ties back into that measurement piece and some of the other impacts on other areas, but that's a big trend in the industry, been massive for our clients, and Josh will talk a bit more about that in a second. The second point, so content, photography, creative, I feel like this is probably going to be one of the most impacted areas by AI, both in terms of kind of the solutions themselves, but also people building on top of them. However, our clients are still spending significantly more in these areas. So people are investing more in the models they're using, people are investing more in the content they're building for on-site, and also kind of in-housing studios, in-housing different functions around it. And then creative, which again, you know, there's so many new solutions coming into the market, but all of our clients are kind of doubling down on that area, investing in localizing creative for some of the emerging markets we'll talk about. So yeah, that would be a big one. And then the end-to-end experience. So I'll talk a bit more about this tomorrow, but I think there's a big trend again amongst our clients and the brands we're talking to where people are kind of finally trying to build different experiences for a net new low intent user that has essentially been browsing Instagram, seen an ad, no purchasing intent coming through to the site, first touch point with the brand versus a returning customer that's purchased before or someone that's been on the site multiple times. So we'll talk a bit more about that tomorrow. And then I think that's probably it for this slide. Markets forecasted to achieve the highest growth for 2025. So I think, as Josh said, the US, I think you said it, I don't know if you said it or not, but the US for Q4 was really positive, and I think that's particularly interesting because for the first 9 months of the year, it was super volatile. At points, it was terrible from a cost per acquisition perspective. So I think people have really kind of doubled down on that and started to really invest more time in understanding the market, moving resource from their team to focus on the US market specifically. The obvious big caveat or thing to think about here is the tariffs. So I think we haven't seen too much impact yet from a performance perspective, but we're definitely seeing clients start to think about how they counter the margin impact, and I think we'll also see a consumer behavior impact in that consumers are going to need to think about the experience and the impact on them. So we've already seen clients start to talk about de-risking and look more at Europe. And then the other markets that are actually growing. So the US has been really positive, as I said, double-digit growth consistently for the last 6 months, I think, across our client set, which has never really happened before. Germany and France have been really positive, but the other ones in terms of de-risking and where our clients are investing time and money would be South Korea, Japan, and the Middle East, which are not easy markets to localize, but they are strong markets from an economics perspective and from a performance perspective. So particularly our more premium clients are investing a lot more money in acquiring new customers in those markets and trying to improve the experience. And then lastly from me, so I wanted to ask a question around AI. And I think it's quite interesting because we were here, 9 months ago doing this same talk. And I felt like AI would have probably moved a lot more in terms of how it's impacting the day-to-day for our brands. I think there's been so much development in terms of the technology, but actually adoption overall isn't crazy. So I think the top two there kind of sum it up, and it's definitely what we've seen, which is I think a lot of our clients are starting to use some of the LLMs for like generative content and to kind of improve some processes on that side, content generation, potentially translation, but not too much beyond that for our average client. And then we've got a handful that have kind of moved resource from technical teams to kind of building the IP and building on top of their own kind of processes. We haven't really seen anyone doing much around kind of the agentic side. However, I would say that people are buying solutions based on their AI capability. They're looking to kind of invest in automation and kind of operational efficiency, and we'll come on to some examples around that tomorrow. Josh?
Lovely. Yeah, so one of the first questions we asked on the performance side was just whether you're looking to increase ad spend. So I wanted to pretext this with, again, some industry context. So advertising spend in the UK last year grew 12%. And what's quite interesting, so 12% growth in ad spend, e-commerce across the UK grew 4%. So there's essentially been a market-wide inflation in cost of sale. So ad spend is growing quicker than online turnover. But in terms of our survey, 33% of respondents are planning to spend more on marketing this year. 28% are planning to spend more on channels outside of Google and Meta. And what we're seeing, so we go into a bit more detail tomorrow around kind of like our proper view of trends and where we see the market going. But one area I'll focus on is profitability behind media spend. So essentially, whilst brands are looking to spend more and whilst costs are increasing, making sure that the value of every pound spent is as effective as possible. So, really baking in, considerations around pushing products of higher margin, making sure we understand what customers drive high lifetime value, baking in, considerations like returns, and just having a true goal or a true view of like the net incremental profit for every pound returns. So that's been a big trend on that side. This I really like. So on the influencer side, 50% of the respondents plan to spend more on influencer marketing. And again, if we touch the like industry-wide stats, so the influencer industry is growing at 14% a year. Its rate of growth is slowing. It's definitely quite a mature market. But where we work with a lot of premium and luxury brands, I'd say they've been quite slow to adopt influencers. So our clients are spending 2 times more on influencer content today than they were a year ago. And then just to put it into kind of like perspective as well, so 35% of time spent on Meta is people watching content from influencers. So just to be relevant to the content people consuming, just to kind of like resonate with what people are watching, you definitely need some level of influencer strategy. So one of the bigger trends we're seeing is in-house content creators being hired and just people actually able to kind of like produce that content regularly. And then the final stat from my side, but is an influencer ad is 53% more likely to drive engagement than a brand ad. So all of these reasons are kind of like contributing to the continued growth of influencers. And then this slide I really like as well. So I think this is going to be kind of like very, very important over the next 24 months. And essentially it's understanding the value of your production and content that you're producing. So we done this as a bit of a survey just to get an example as to how much of your marketing budget are you putting into content. So you can see here that 30% of respondents spend more than 10% of their marketing budget on content. And whilst we know content's becoming more and more important, what I expect we'll see over time is brands truly understanding if they do run more shoots and they do invest more into content, does that mean more reach on Meta? Does that mean more efficiency? So I'd imagine over time we'll start to see people baking in content production costs into their measurement. So Tom Hancock, our head of paid, is actually doing a talk, pretty sure it's at 11:40, but today on content and creative diversity. So we worked with Meta's science team to basically do an agency-wide test to understand if adding more creative into Meta and if adding more diverse content into Meta actually drives more results. The answer is yes, but do still please go and watch the
Ruined
talk.
it.
It's very good. And then the final one from me was, just really quickly. So I guess for the last 4 years or so, we've been trying to move brands and clients away, especially from GA-based attribution, but also platform. So we just wanted to give this as a bit of a benchmark as to kind of like what brands are you doing from a measurement perspective. So again, in tomorrow's talk, we'll go through in much more detail our view of measurement, where we see the industry going. But just really quickly, I thought it was quite positive to see that 35% of respondents are already using broader site-wide metrics to measure. So they're looking at CAC, they're looking at cost of sale or market efficiency ratio. And I think if you are doing anything from a forecasting or budgeting perspective, you do really need to be looking at kind of like the broader site-wide impact now, as opposed to making assumptions on attribution, whether it's GA or in the platform.
Lovely.
That's all.
Yeah, so thanks everyone for listening to this. Like I say, we've got another version of this tomorrow morning that's a bit more focused on kind of tangible examples of what some of our clients are doing, what other brands are doing. But yeah, that's it from us. Hope you enjoy the next 2 days. And reach out to us if you've got any questions.
Thank you.